Solana is trading roughly 75% below its all-time high. Sentiment is on the floor, and yet a $400 billion bank is quietly modeling it multiples higher. The most significant tokenomics improvement in history is on the table, and the biggest names in TradFi are building, whether or not Washington passes the Clarity Act. So we decided to ignore the noise and ask the only question that really matters right now: how high can Solana actually go in 2027? Let's start with the bank. This is Standard Chartered. They have over $400 billion in assets under management, and they're growing fast, with around $100 billion added in 2024 alone. They also are among the first banks to offer spot crypto trading for institutional clients. But this is why we're talking about Standard Chartered, because Jeff Kendrick, their global head of crypto research, recently lowered Solana's price target from $310 to just $275 by the end of 2026. And he added that ETH could actually outperform Sol in the immediate future. Right now, Solana trades at $75, so it's still more than a 3x price prediction for Sol by year end. But here's where things get really, really interesting. He sees blue skies past 2027, for which his price target is $400. From there, $700 in 2028, $1,200 in 2029, and $2,000 per Sol by 2030. Now, an honest note here because it matters. Kendrick's thesis isn't about the tokenomics we're going to dive into today. His bet is on AI-driven micropayments and stablecoins on Solana moving 2 to 3 times faster than they do on Ethereum. He is bullish on both chains, so not calling one against the other, but the direction is unambiguous. One of the most respected desks in global banking sees Solana multiples higher from here, possibly even 3 times higher within the next year. And the smart money is already moving, because if you go to solanafloor.com/ETF tracker, you will see that since October, Bitwise's BSOL ETF has absorbed around 78% of all net inflows to Solana ETFs. Look at this, $8.83 million in net inflows to BSOL on August 10th alone. Plus, despite terrible share price performance, digital asset treasuries, or DATs, now hold 3% of all SOL. And even Morgan Stanley has filed for its own spot Solana ETF recently with the ticker MSOL, which at 14 basis points is the cheapest on the market. It has staking built in, and it'll be distributed across 19,000 advisors to essentially push SOL to their clients. All of that means more smart money becoming SOL buyers. But here's the part that bears are missing. All of this is happening without the Clarity Act. America's biggest crypto market structure bill just got delayed again to September, with no guarantee that it even passes this year. But apparently this matters less than you think. Don't take it from me, take it from Rebecca Rettig, one of the most respected regulatory minds in the industry.
Crypto, the genie's out of the bottle. We're not putting it back in. Okay, fine. Token prices might go down if Clarity doesn't pass. That's a factor of like our own, bag holdingness and our own crypto, traders who want to or think that Clarity is necessary to move forward.
Rebecca also reminded us of just how critical crypto has become despite not having clarity.
But if you think about the crypto industry on its own, we have not only prevailed, we have become a critical part of the digital financial economy, not only when we didn't have regulation, but when people were pushing against us. And we did some of our most innovative work then. And I actually think with the institutions coming in, that Clarity will put everybody on an even playing field.
Rebecca told us that competition could heat up with the biggest banks in the world, but that this isn't exactly the catastrophe that we might expect it to be. Take a listen.
And so we will have to compete with the likes of JP Morgan and Citigroup and banks, and that may be very challenging. And so I don't think it all is not lost. Jack, I know you said people were saying, like, is it over for us if Clarity doesn't pass? The answer is no. We will get regulation. We'll get rulemaking from the SEC and the CFTC on various things associated with crypto.
Now, this part's important. Rebecca Rettig laid out her arguments further in this post, where she argues crypto's stopped being the main character. It's become critical infrastructure. With or without Clarity, internet capital markets will keep moving. The evidence is everywhere, she says. Just look at these 3 examples. 1, ICE, the company that owns the New York Stock Exchange, put $200 million into OKX at a $25 billion valuation. And they're building tokenized NYSE equities. On July 15th, the DTCC, which is the backbone of US securities settlement, processed live production trades of tokenized stocks and treasuries with BlackRock, Goldman Sachs, and Vanguard among the top 30 participants. And 3, the S&P 500 was licensed to a real-world asset market on Hyperliquid. None of this needed Clarity. The rules are being written by the agencies, the SEC's crypto project and the CFTC's harmonization task force. This is happening in real time. The markets, in Rebecca's words, keep growing regardless of the Senate's calendar. So, to put it simply, the institutional case for Solana doesn't hinge on a bill anymore because it's already underway. Now let's think back to that $1,200, $2,000 long-term price target from Jeff Kendrick. Now layer on the thing that Standard Chartered hasn't even priced in yet. Solana is debating the most significant change to its tokenomics in history. And we sat down with the people writing it, who we'll hear from in a second. But very simply, there are two proposals here, SIMD 550 and SIMD 553. SIMD 550 is about disinflation. Plainly, it makes Solana print less. Less SOL printed means less inflation. Pretty simple. In fact, we can see on this chart from SolanaFloor.com that SIMD 550 promises to double Solana's disinflation rate from 15% to 30% per year. Now, the second SIMD, which is 553, is arguably the big one, a resource fee that introduces a new structural source of burn, and it rewires the incentives on the network. Both of these proposals are under discussion. They're not passed yet. They're not live. But if they land at the end of this month, here's what the author himself told SolanaFloor could happen.
Just because, the first incentive we're trying to install is essentially trying to incentivize app developers to make more efficient, smart contracts.
Now, we'd actually ask KV what that actually means for offsetting some of the inflation that has been so frustrating to SOL holders.
Now, in terms of the numbers that we can expect to see at the terminal rate, with the current level of traffic, we should expect roughly 1/3 of the current issuance to sort of be offset.
1/3 of new SOL issuance offset. And the mechanism is clever. It raises costs on what they call toxic takers. These are essentially arbitrage bots that are spamming the network, while at the same time lowering costs for the market makers who are serving real users. So what Solana gets is better markets, more burn, and the retail experience barely has to change to achieve this. So going back to why these SIMDs even exist in the first place, let's listen to KV on whether Solana can ever become deflationary.
Do you think that that's somewhere we can go? Do you think that we can actually end up deflationary on Solana?
Yeah, if Solana wins, if we bring finance on chain, the current parameters in the SIMD, it's possible it can become deflationary. It's definitely within reach. Not at current traffic, but it's definitely possible.
So the overall outcome is net bullish for Solana, and here's why.
But all we can do is fix the incentive structure, right? Which is what we're trying to do, right? Try to make Solana the fastest place and the best place to trade and own, basically, any assets.
The fastest place to trade and own any asset. This is the part that arguably turns a price target into a story, a narrative that investors want a piece of. Solana is becoming the on-chain everything exchange. Perpetuals, a maturing stack which Solana needs to continue competing in and winning market share in, with Hyperliquid, as we know, currently the clear leader. Then we have prediction markets led by Kalshi and Polymarket. It's another vertical that Solana is competing in. We have Jupiter Predict, live and finding real traction. World.xyz, another Solana native venue growing rapidly, and even Melee Markets, which is sort of a newcomer, reimagining prediction markets through a novel PMM model. Then there's the massive world of on-chain trading cards and Gacha, where Collector Crypt passed $1 billion in cumulative volume this year. And now we have JTX as well, the new prosumer trading venue from Jito, which went live recently to really elevate the trading experience and bring it on par with TradFi brokerages. But there is, of course, much, much more happening. Listen to Mert on Solana doubling its block space.
Ago, Solana's block space was 48 million compute units. Now it's 100 million compute units. Solana's block space has actually doubled in a few months. Technically, now you can pack more economic activity and more interesting things per block. So Solana's block times are 400 milliseconds, but they're actually being reduced to 200 milliseconds. So it's getting twice as faster while it's supporting twice as much more activity, which is a fourfold increase. Solana is already the most scalable chain today without needing a centralized server and calling an L2. The most scalable chain is getting even more scalable. And it is really a very, very underrated piece of engineering what's happening here. And of course, the user shouldn't necessarily care about this. As far as milestones goes, if you ignore the price, which is what we had to do during 2023, 2022, during FTX crisis, for example, we have the exact same setup here, which is to say there's an insane amount of physics and engineering work being done that paved the way for the next Jupiter, next Jito, next Pump, next Phantom, next Magic Eden, whatever it might be. And so it's by far the best place to build your business in finance, in my view.
Even Robinhood built its own chain to capture this activity. The same way Base validated Solana's playbook, everyone is now copying it. And let's be honest here, when your competitors start copying your architecture, you're clearly winning that argument. And then the wild card nobody saw coming. The trenches are back. In the depths of this bear market, Ansem, who's credited for calling Solana's bottom near single digits back in 2023, and then controversially taking profits near the top, published an essay. And he's laying out a thesis for tokenized creator economies led by the Ansem meme coin, or the Black Bull. It did 2.7 million views in the depths of a bear market. Here's his price target for Sol.
Yeah, so it went from $20 to $297 this cycle. I think you can go from 60 to around like 600. That's my expected target.
But his most recent target for Solana is Ethereum's old all-time high, a $600 billion market cap.
What's your price target for Sol?
So this cycle, I said 600, but like my real price target is ETH's all-time high. ETH's like all-time high market cap, which I think was around like 600 billion, which would be close to like, it's like 990 on Sol, I think is the actual number.
Now, Ansem adds that what's mispriced on Solana right now is people underestimating how much the infra upgrades compound, and that many L1s don't do a good job of consistently improving cycle to cycle, but Solana definitely does. Now, a health warning, because we're not going to pretend otherwise. This is a high-risk speculation from Ansem, but as a signal of returning attention and liquidity, this viral bull thesis, which pulls millions of eyeballs in a bear market, is exactly the leading indicator that shows up right before the crowd comes back, along with potentially parabolic price action. So let's zoom out here because the long-term price targets get genuinely wild. Back in January 2026, Bitwise published its investment case for Solana. This is a 2030 bear case of $2,300. They've got a bull case of over $6,600. Now, granted, those numbers were set in January, and the market has taken some real punches since then. So we do need to be realistic. And here's 5 reasons why those targets would sit much lower if they were rewritten today. 1, the Fed under Kevin Warsh turned hawkish and markets priced out the rate cuts that fueled that 2025 rally. 2, the corporate Bitcoin treasury trades started unwinding. Unfortunately, Strategy itself began selling with hundreds of millions sold. Sailor Strategy became a net seller for the first time in history last month in order to quote unquote increase USD reserves, meaning they needed cash. So they sold the most valuable asset that they own, which is BTC. 3, this was the worst half year for crypto hacks in history, with over $1 billion gone, according to Blockade reporting. 4, clarity slipped to September, delaying regulatory clarity, which increases negative sentiment. And unfortunately, 5, a wave of token unlocks, over $370 million in a single month, added some raw sell pressure as well. So the targets, if they were rewritten today, would be significantly lower because macro is more complicated, not because the thesis broke. But the people who read cycles for a living are also leaning in right now at the bottom of the bear market. Here's Nansen's founder, Alex Svanovic.
I think we reached the bottom. I don't think Bitcoin's ever going to go back below $60,000. Bitcoin is the counterpoint to central bank endless printing of money. And so what that means is that you get these like higher lows every cycle. You know, if tomorrow we see like Satoshi's coins are moving, then of course, like all bets are off. That would be pretty much a disaster.
Now, luckily for us, it's not just institutions and founders, even the chart technicians have flipped bullish. Solana recently broke above descending resistance on the daily, and some analysts are flagging it as the best long-term entry of the cycle. Take any price target with a usual grain of salt, of course. This is not financial advice, but the structure appears to be shifting. None of this works if Solana isn't safe. So let's be honest about risks here. Going back to that Blockade report, again, 2026, the first half of it was the worst year on record for hacks. Over $1 billion lost across 212 incidents. But the fix for that is arriving. Companies like Satora are leading the security layer forward, and they're bringing automated formal verification to smart contracts. There's a thing called autoprover, which means teams no longer need a maths PhD to mathematically prove that the code is safe anymore before they ship it. As AI makes attacks more sophisticated, it's also democratizing defense against the hacks. Now, the everything exchange idea only really works if it's also a safe one. And the tooling, it appears, is finally here with AI-powered formal verification. So here's the verdict. The bull case for a higher Solana all-time high in 2026 rests on 3 legs. Institutional distribution that's already live, a tokenomics overhaul that could be live soon, and if it passes, will structurally change Sol's supply, and an ecosystem becoming the place to trade everything. Now, those caveats are real. The SIMD proposals are live, not law yet. Solana is not deflationary today. We also know that hacks are a genuine drag, and they sour retail from ever coming back on chain to take risk. And finally, none of this is financial advice. Always do your own research. But if these pieces land, the setup for 2026 looks to be one of the strongest that Solana has ever had. Now, we can end on these 4 charts which depict where Solana is headed perfectly. 1, Solana apps generated $82.9 million in revenue in July, the highest since February. 2. Solana's share of network revenue climbed to 16.5% in July, now third among all chains and ahead of Ethereum. 3. Stablecoin supply grew to $15.7 billion, a new all-time high. And 4. Meme coins are back somehow, jumping to 25% of all Solana DEX volume as trading rotated back in. Now, as the man writing these economics overhauls put it, make Solana the fastest place, the best place to trade and own basically any asset. That's the goal. Build that and the price will take care of itself. Now, if this video made you rethink anything about Solana in 2027, please like it so more people can see it. Subscribe to SolanaFloor for all the live streams, the deep dives, the shorts, the interviews, and the instant coverage on X. And we will see you next time for more of the very latest.